Hi, this is Mary Beth Harrison with the Dallas Native Team. And today I have a guest in the nest. I'm so excited. I've got Jason Dickson with Integrity Mortgage to talk about this crazy market. Jason, what in the world?
Busy. Everyone's buying in Texas. Everyone's moving to Texas, so it's historically slammed. And so I guess we're going to talk about all the crazy competitive things you have to do to win, right?
Seriously, I mean, there's this sucking sound coming from California. It's just
Right.
it feels like a funnel of people coming in as fast as they can get here. And then if that's not enough, they're coming in from New York as well. So there's this meet in the middle that when you think about it, why not come to Texas? We're the friendliest state you'll ever live in. Don't ask me for beachfront or mountain view, but we are phenomenal business climate. So, and we're close to an international airport. You can be anywhere in 3 hours. So why not? We don't have a state income tax. We don't have a personal income tax. What's there to not love about being here? It's just, I get it, but it certainly is making things interesting, isn't it? So talk to me about the lending side of things. We talk about the buying side of it all the time, but let's talk about what that step is, because you can't buy a house without having, and either you have cash or you're going to have to get a mortgage. So let's talk about what that looks like.
Well, so first of all, as you know, I always use a term that my wife says, Jason, don't say that because it can offend some people. So, but I think it's a good way to analogize it. It said, when you're making an offer through Mary Beth and her team, we've got to make your offer as attractive as possible. I always say the prettiest girl at the dance, so no offense, right? But you want that offer to be as attractive as possible. And so the different things we can do to do that, because when a seller, as you know, Mary Beth, is looking at 5 to 36 offers on a contract spread out on a table, it's not just about the highest dollar amount. It's about the type of loan. You've got to be conventional. If you're FHA or VA, you're already at a disadvantage.
I know. And in that chain, I feel really bad for that first-time home buyer. That's what FHA was put there for. And VA, they certainly earned it. I mean, Lord knows they have earned it.
Right.
But it does. I'd like to say it doesn't make a difference, but it does.
It absolutely does. That's right.
Yeah.
Well, and so one of the things we do is the importance of your lender working with Mary Beth, the realtor, and her team as a team together, because the different things we do combine, the terms that you negotiate, Mary Beth, as you know, really make or break a deal when you're in a multiple offer situation. And so the things that we do as a lender, just real quick flyby, is number one, it's not just a pre-approval, you want to be pre-underwritten. Okay. And number two, all of the aggressive things that you're going to talk about, Mary Beth, the main thing is, for me, I always like to provide you, per permission of the client that we're talking to, proof of funds to submit with that pre-approval letter. And then most importantly, me making a phone call to that listing agent and saying, hey, listing agent, my name's Jason Dickson. I'm the lender for such and such client that submitted an offer through Mary Beth and the Dallas Native Team on such and such address. They've given me permission to talk with you about their financial credentials. The credit scores are X. Here's their job history. Here's their money. We actually provided proof of funds so you can see that. We want to make sure your seller has total confidence that this deal isn't going to fall through because of financing, knowing that you've got a lot of offers to contend with. So what do we need to do to win this deal? And we'll provide any information you need that'll help us out.
Right. I can't tell you how many times I have heard from other agents after you've called them. It's like, wow, the lender called me to say, it's just it's one thing to get a letter that says, yeah, I talked to him and yeah, Susie and Bob are going to be fine. It's one thing to get a letter that's kind of a little nebulous. It's not
specific.
Yeah, they got the money. It's kind of I've talked with them. They seem like nice people. It's kind of that kind of letter. That's not going to fly anymore. I want to go back to something you said about underwriting. So it's not just, there's two things here. I can call you and go, hey, Jason, it's Mary Beth. I want to get a loan. And you go, okay, let's, look at your credit report. Give me Social Security so we can check on everything. So you've checked my credit, but you haven't checked anything else. All you've done is talk to this who knows who on the phone and run their credit. So let's talk about that next step, because that's not enough anymore. It is not enough for a seller or another realtor to see that all you did was make a phone call.
That's right. You have to pull, you pull credit, you actually obtain pay stubs, you obtain all of the funds to close, assets, retirement. You fill out a full application with a TBD property address, right? Because we have guidelines as lenders where if we provide the property address, we call it pencil because it's an acronym that stands for these certain steps. We leave the address out because that gives us the compliant ability to go through everything and pretend we're under contract, run that information through underwriting, receive the approval with the conditions that the underwriting staff is actually going to underwrite to ensure that those things are provided. Because everyone needs to know this, a loan officer, we don't have the authority to approve a loan. Only an underwriter can do that. And it doesn't matter who you're talking to, the underwriter is the authority at the end of the day. So you want a loan officer that's going to take the full application, collect all of the information, run underwriting, and know that this is pre-underwritten, ready to go. Now, the contingency is anyone could lose their job any day that they wake up if they don't know anything, right? So those things that are completely, the reason it's not officially approved, cleared to close, number one, we don't have an address. Number two, we have to have all of that clear to close officially. That official document comes at the end of the process going into closing. So anything still could happen, but to set yourself apart from all of the other offers, most lenders are just doing a pre-qualification, or they're just issuing a pre-approval letter based on the documentation they provided, but they didn't run it through underwriting.
Right. So there are two things I want to bring up. In our contracts, our third-party finance, which talks about the financing that the buyer's going to get, there's two different paragraphs. One is the buyer creditworthiness. The other one is the house creditworthiness. Two different issues here. They're not in the same paragraph. So the buyer's creditworthiness is on everything that Jason's pulling from them, their income resources, their expenses, they're all of those things that go into making up your credit and making the buyer creditworthy to buy this home. Then there's another that talks about the house creditworthiness. So the buyer can be as creditworthy as they want, but the house, maybe it's not insurable. Maybe it's not, maybe it's the survey, maybe it's in the title commitment, there are liens or assessment. It could be any number of things that affect the house. So the buyer's approved, the house isn't approved yet. So all of that has to come together to make the loan when it's all said and done. So all we can control and all you can control, Jason, is the buyer's creditworthiness. And then at the end of the day, we put the whole thing together and that makes the loan. So yeah, the underwriter is that person that sits in a room with no doors and no windows and makes decisions for all of us, whether we like it or not, right? But the important thing is that you get all of those documents that the lender needs from the beginning when you first think you want to buy a house. And especially if you're going to be moving from out of state, oh my goodness, get all that stuff together. So Jason, I know you need 2-year tax returns at a minimum, 2 years of tax returns, right?
Well, only if you're self-employed. If you're W-2, it's even easier than that. Just the most recent year. Now, if you're commission and bonus income, yes, we're going to want to see 2 years W-2s. If you're W-2 employee with that company for 2 years or in that same line of work, earning bonus and commission, doing the same thing for over 2 years. But if you're an employee, typically 9 times out of 10, we're only going to need your W-2, not your tax returns. Tax returns are the can of worms that go with self-employed or 1099 borrowers.
Good to know. All right. That's real good to know. And then 2 months of bank statements.
That's right. 2 months, all pages of each month. And then retirement statements, 30 days, because a lot of down payment comes from 401k loans or IRA opportunities that are there for people. But which, by the way, a lot of first-time home buyers and fifth-time home buyers don't realize you can borrow from your 401k for down payment, which is important in this market because you might need more money to win the deal.
Yeah, let's talk about that. I have not written a contract in 30, 60 days that my buyers did not have to go over asking price to get the deal. And even then they didn't get it. So, I mean, when I hear what is winning some of these contracts, sometimes it's 50, 75,000 over asking price, which is crazy.
Really
crazy. So let's talk about that a second. How does that even work? So let's just take a $300,000 house. Let's just make life easy for a second. So, and the buyer wants to put down 20%.
Okay,
So-
so
Talk about that.
So let's say, and by the way, don't be discouraged for those of you listening. It's not everyone's going 50 to 100,000 over, but it is common 10 to 20,000 in that range. You want to expect that. And the good news is that most of these properties are appraising if you're in that realm of pricing.
Yeah, I'm amazed at how many actually are appraising for more. I think the sellers and the realtors have become very smart about pricing them really well. Let the buyer bring the price up. Rather than the seller to be greedy and start with a really high price. I think that's I've seen a lot of that. I've seen homes that when I do my market analysis for the buyer, I'm like, guys, this is priced really well. I mean, you've got some wiggle room here
To go up.
Yeah. So sorry to interrupt you. Go ahead.
What you asked was if someone's putting 10%, 20% down, if you're prepared because you're going to have to, it's what's called guarantee the appraisal. So if there's a $300,000 home and you're going to offer $310,000, but the property doesn't only appraises for 300, worst case scenario. Well, if you've guaranteed that appraisal, you're now on the hook that you have to bring an additional $10,000 to closing. So a lot of buyers, it scares them thinking, oh my gosh, I didn't budget for that. But if you're putting 10, 15, 20% down, the great news is we just lower your down payment and we take from that higher down payment you're expecting to make up the difference if in a worst case scenario, the property didn't appraise. And it's still completely doable. People get hung up on things like, well, I don't want mortgage insurance. I'm putting 20% down. Well, mortgage insurance at 10% and 15% down is almost nothing. And it's going to go away more than likely. I mean, unless barring a nuclear war in Texas, right? I mean, people moving here, the values are going up. Your mortgage insurance is going to drop off in 24 months. Chances are, not a guarantee, but it's happened to me the past 3 homes I've bought and over the past 2.
So let's put some dollars for a second. So this $300,000 house, I was going to put down 20%. So I was going to put down $60,000. So instead, knowing I went 10,000 over asking price and it only appraised for the 300. So I'm on the hook for that 10,000. We're now going to lower my down payment to 50,000.
Right.
And then that additional 10,000 made up the 20% I was always going to put down to begin with.
That's right. That's right. That's right. And the difference between that monthly payment is going to be a very, very small, very small. And if it's the difference of getting the house or continuing to rent, it's a no-brainer because if you wait another 6 months, that cost of waiting could cost you in this market another $10,000 or $30,000 on a $300,000 house.
No doubt. In January, year over year, in January, the stats were appreciation was up 15%. That is huge. So when someone says, well, what's the cost of me waiting? Well, I would argue it was 15% in January, right? Right. And so the cost of waiting is getting to be significant. Typically in Dallas, our appreciation is about 6 to 8% year over year. However,
it's changing.
And going back to your thing about PMI and getting it removed, I want everyone to understand that PMI, if once you have 20% invested in a property, whether it's because it appreciated or you've made your payments to lower it, so there's a gap there of 20%, you can go to your lender and get that PMI removed. They just want to know that there is 80% invested into that home. So that that's gone on the example I used where you were going to put down 20% and you instead put down 50,000, added the rest. It's not going to take very long for that appreciation to get there at all.
That's right. Well, and when you purchase, Mary Beth, this is something that could change. But right now, a buyer needs to expect, if you have mortgage insurance, which it would be a small monthly amount, you won't be able to get rid of it without refinancing. If you refinance and rates dropped, you can get rid of it immediately. There's no time constraint on that because there's no prepayment penalty on a loan, FHA, conventional, or VA. But you need to expect to have that mortgage insurance for 24 months before you can call to have that dropped off through a new appraisal. Now that could change. It all depends on the mortgage company, the MI company's requirements but right now, expect 24 months.
That's good to know. I actually have not heard that. That's really good information to know. So, and in 24 months, the way things are going in the Dallas metroplex area, that 20% is going to get eaten up pretty quickly.
Really bad. That's right.
Yeah. So, Candace, I'm sorry, I didn't even introduce you, Candace, our watching our chat box, because it's hard to be talking and watching a chat box at the same time. Did we have any, I think I saw some questions come across. Is that correct?
We are. I'm watching the Facebook Live, and I'm watching people in here too. So we have a few questions. What is the minimum credit score you can have to buy a home?
That's a good question.
Yep. So you want me to take this one?
Yeah, absolutely. I'm just thrilled. Don't be looking at me.
Right. So in this market, remember, it's if you can qualify for conventional, go conventional, because it's your best odds of your offer getting accepted. That said, conventional minimum credit score requirements. There are some exceptions to this, but generally speaking, you're looking at a minimum of about 620, worst case scenario for conventional.
That's lower. I thought it was 650, so I would have been wrong. So 620, wow, that's low.
620 would come along with a higher down payment, probably 10% or above, depending on a person's financial credentials or credit score, credit history, et cetera. But that's the minimum. If you're talking about FHA, technically there are lenders out there that will tell you that you can get an FHA done at 580. But again, this is why FHA is not as attractive to a seller, because when you submit an FHA offer, it doesn't mean it's true, but the perception is you either have no money or bad credit or both. And that's just not true. And so that's why what we talk about the communication, because there's some advantages to FHA if you can't qualify for conventional. But so I would say, safely a 640 for FHA, but you can go down to 580. So, I mean, there's some wiggle room. It just depends on your particular history. And so every person's loan file is totally different regarding that. VA is the same. VA will accept a little bit lower than conventional. So, anywhere from 620, you're probably safe on VA. It just depends, again, on your particular situation. Ideally, what we're always looking for, where you're a slam dunk, you're safe, would be 640 on VA, FHA, as well as conventional. But that's not always true. It goes lower in reality.
Okay.
I want to back up.
The next.
Go ahead, Candace. Sorry.
If you need, I have another question. So if you need to go ahead and answer him, go ahead.
I want to go back one thing, because I think VA and FHA are getting a really bad rap right now. I need everyone to understand that it used to be that there were certain things the buyer could not pay for, especially on VA. That's not true anymore. There is nothing that the VA cannot pay for. FHA is the same way. So it's not going to cost the seller any additional money to accept a VA loan or an FHA loan from a buyer. Am I correct, Jason?
That's right. I would say the downside, if you're watching this and you think I want to go VA, or I know I'm FHA, the obstacle and the challenge you're going to have, this is where I would come in with Mary Beth, and we would come up with a strategy depending on the selling agent's personality. But FHA and VA give you, the buyer, an out if the property doesn't appraise. And
Good
so
point.
The realtor has to negotiate that clearly to say, and I mean, because at the end of the day, legally, you could walk away if the property didn't appraise, and you're probably going to be offering more than list price. So a seller gets really uncomfortable with that. So if you can convince them that you're a man or woman of your word through Mary Beth, that, you know what, you're allowed to pay more, but you have the legal right to cancel.
That's really the sentence I want everyone to hear. FHA and VA have, as a buyer, have the right to pay more than the 3.5% down if they choose to, or VA puts nothing down. But they have the ability, let's use our $300,000 house, and it comes in and they want to bid 310. As long as Jason sees that they have the additional $10,000, should it not appraise, then he can share that with the other agent, going, they have the money to put this additional out, or mom and dad were going to gift them the money, or grandma, whatever, right? There's ways to go about this, or maybe they're going to go, okay, I want this house bad enough, I'm willing to go to my 401k and borrow from it to get the 10,000. But at the end of the day, Jason knows that, right? As a lender, he knows that they either have the ability to do this or they don't.
That's right.
And so where we can't use the appraisal addendum for an FHA or VA because it clearly says you cannot, do know that an FHA or a VA buyer has every right to pay the additional money
if they want to.
have money.
That's right. But that requires great communication with your realtor. That's where Mary Beth comes in as a deadly weapon that's to your benefit, that you have to use. The key and the reason to use an experienced realtor, because the newbies out there, there's a lot of them. It's not of no fault of their own. They're having to learn in a crazy market, but they don't understand that, right? And so these things discussed up front are so important. One popped up that I thought was really important. We didn't even talk about, but it was a question that popped up over Candace there that said, can you change jobs while you're in the process of whether you're VA, FHA, conventional? And that's a really good one. We were talking about this at the office the other day. What if the new job pays you $50,000 more? Well, why wouldn't you take that job? Wow, you're more qualified, right? It can absolutely kill the deal because we're underwriting you based on the job you've had. And you can change jobs, but you don't want to accept anything without communicating to your lender and your realtor, because we have to get your offer letter. We have to make sure all contingencies have been met. If you're about to take that new job, let's say that you're about to go into closing, we've verified all employment. Day of closing, we have to verify that you still work there that day verbally before that loan is funded. And so if they come back and say, oh no, they gave their notice, you've lost your contract close date, you can't get the loan closed, because we'd have to go back to underwriting to document that. And that happens 2 times a year.
Yeah. It's something that you brought up. They can bring a letter. I say they can. I'm going to ask this question. I'm putting this in the form of a question. They can bring a letter from the new employer going, Fred's going to be employed for the foreseeable future with this company. So they have some documentation. At the end of the day, guys, documentation is everything. I don't care if it's for a job. I don't care if it's for mom and dad giving you a gift. I don't care what it is. It's just, it's like talking to your priest over here. Tell him everything and then let him decide what needs to be taken forward or what doesn't. What's important that you're telling me and what's not important, right?
Right. That's right.
So, and then 2, I think a bigger job change is that I went from a W-2, meaning I got paid hourly, salary, whatever that is. I knew every month I was going to get X number of dollars, and now I'm commissioned. We're done. This conversation is over because you don't have any history of being a commissioned person, having to make your own money off of your efforts, right? Not that you can't. Don't get me wrong, but there's been no evidence that you have been able to survive in that type of an environment. And so if you're going from a job as a janitor to a job as a janitor, that's probably fine. But if you're going from a job as a janitor and now you're going to go sell whatever,
real estate.
Yes, it's like that is that. Like that ain't gonna happen. You're not gonna get that loan. And so
well, going along the same thing, we have a question. How long do you need to be employed to buy a home in a specific job?
That's a great question.
That's a great question. Okay, so it's also a trick question. So if you're coming out of school, okay, and so let's say you've gone to trade school or you've been in college, whether it be associate's degree or degree, master's, etc., we can count, the magic number is 2 years. So there's the answer. 2 years is the magic number. However, school counts. So let's say that you've just graduated from college and you've got an accounting degree. And so you're an accountant making $50,000 to $70,000, a great accounting job, but you've only been there for 4 months. Well, you're straight out of school and you went to college for 4 to 6 years to have that degree. We just get a copy of your diploma and your transcripts, potentially probably just transcripts or diploma. It depends on the lender. And if it's Fannie, Freddie, Fannie and Freddie have different guidelines. You can do that. That schooling counts as your 2 years, but the magic number is 2 years. So let's also talk about this. If you were self-employed, which also includes 1099 contract, okay? If you were self-employed in a line of work for 2 years or more, and then you move to W-2, you're good to go. But you can't go the other way. You can't go
Right.
W-2 for 5 years, and now I'm 1099 and I'm making more money. Unless it's 2 years with 2 years tax returns, it won't work. But you can go self-employed to W-2 and you're good to go, provided you've got that 2-year history and we can document your income and you qualify. So I hope that helps.
Yeah, that's good. That's really great information. So I can go from being self-employed to being a salaried person, and that's okay. You just can't go from being a salaried person to all of a sudden being a commission salesperson. Really good to know. I didn't realize that jump the other direction would work that way. And then, like I said, a letter from your employer stating that yes, you're going to be employed here at this.
Here's how much money you make.
Right.
Here's what we're going to pay you starting this date. And then the word is that there are no contingencies. So what that means is this can throw a delay in closing that Mary Beth needs to know about by the lender quickly. And that is drug test, background check, test, and everything be cleared. Those are contingencies of an offer letter.
Gotcha.
Not all lenders can use offer letters. We can, so some can, some won't. It just depends on the lender and their trust in their team, because we've got to meet certain guidelines to make sure that's really your job and you're not going to lose it because it's brand new and you haven't even started and we're using that income. So as long as all contingencies are removed from that offer letter and it's got your start date and the amount they're going to pay you, and we will verify that those contingencies have been removed, then we can use that. If not, then we're going to have at least one pay stub that you've received showing consistency and congruency to that offer letter. So that's where it could be a delay, because sometimes when you start a job, you don't get paid for 4 weeks, depending on when you started.
That brings me to another good question. Well, it's my question, so of course it's a good question. Do I need to raise my hand, Candace? Or are you okay?
Yes,
with me
please. I'll call on you next.
Thank you. Writing contracts right now, what is a reasonable time to put for a closing period? 30 days for me seems reasonable. I know if we're this busy, you're that busy. The appraisers are that busy. The inspectors are that busy. I mean, everyone's in the same boat that we are. And so what is a reasonable period of time to get a closing done?
Right now, to win 30 days, and legitimate lenders out there, they can get it done in 30 days. Now, appraisers are the ones that are delaying the process industry-wide.
Yes.
But so it depends on the appraisal panel and who a lender uses. But we were talking about this before we started today. 30 days is reasonable. In some instances, if there's a special circumstance where we really have to get down and dirty to win the deal because someone's got to sell a house under contract, something's fallen out, and we've got to do it. Lenders have the ability to prioritize, but we just have to have enough runway of communication to know why and to make a case that makes sense for us to move you in the front of the line in front of hundreds of other people, right? We want to accommodate and care. Every buyer and seller matter, right? Every buyer is a seller, every seller is a buyer, and they've got families and jobs and moving trucks. And so we're going to do everything we can to accommodate, but appraisers are slammed. And I mean, the fastest ones on average are getting the order, receiving the order, scheduling, and get it to us within 2 weeks. But some of them can be 3.
Yeah.
Right. And and a loan can't be cleared to close without that appraisal. Like, we can have the loan done, but we're waiting on that appraisal. And if there's an issue with the appraisal, well, then that can slam on the brakes, and we've got to address issues if there's a problem with the property based on what the appraiser saw. So things like that. There's always exceptions to the rule, but 30 days is reasonable. If you're a special exception, maybe earlier, and 30 days should be reasonable. I mean, You're not going to win if you put a 45-day offer in there typically.
Yeah, unless that's what the seller needed. And
right.
In some cases, understand that these sellers are as hysterical as you are as a buyer. And so the sellers sometimes they're putting their house on the market, but they don't know where they're going. And so they're in the same buyer pool that you are on their end, that you've been on your end, right? So what I think is really helpful in some instances is if you can be a little bit flexible as that buyer and I know this is going to be a really strange sentence, of have some communication between the two agents to know, hey, what's the seller's situation? How long do they need to stay in the house? Some of them want to stay till school's out now. That's been a big deal for one of my buyers who really needs to be in by the end of April. And several of these sellers have stated up front, we need to stay here till May 30th. We want to stay till the end of school. So if you can be that flexible buyer, even close in 30 days and lease it back to the seller for those, 60 days, you become a really, really, really good buyer out there right now that doesn't need to close. Absolutely, I got to close and I need to be in 30 days. That's tough right now for some of these sellers. If the house is vacant, you're a joy. I mean, you're like a gift to come along. But for sellers who are living in these homes, they are as stressed as you are about where they're going. And so being able to give them some flexibility makes you a very, very, very good buyer. And sometimes, guys, it's not as much price as it is terms. Sometimes terms sell a house faster than price, because you've given that seller the peace of mind that they can take their time and go find their house or whatever. That it takes a little bit of everything to buy houses these days. You need to have everything in your toolbox. Here, let's pull this out. Here, let's pull this out. What can we do to make this an attractive offer? Candace, was there another question? And I interrupted?
We have one more question.
Okay.
How much money do I need to have set aside to buy a home between inspections, appraisals, option, and down payment?
Oh, that's a good question. I do want to address one thing, and I just did a video on it a little bit earlier that you can go back and listen to. Earnest money comes back to you at closing, as does your option money. The whole point of the option money is if you don't move forward to closing and you terminate during that option period, that's the money that goes to the seller. It's kind of their money for holding their house hostage for 7 days or whatever. Earnest money says, I really want your house. And I'm willing to put this much money aside to do that, right? To prove to you. But understand, in our contracts, there are many, 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 many times that you get that earnest money back if this doesn't happen. If the title work isn't in time, whatever those ifs are, if you'll read through the contract many, 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 many times, it says, or the buyer will receive the earnest money. So, but here's the flip side of it. Talk about making you look like a good buyer. Let's take that $300,000 house. Instead of putting just $3,000 in earnest money, why not put $5,000, $7,000, $10,000 in earnest money? It's going to come back. It's going to go into your down payment, right? So let's take that person that was going to put the $50,000 down. Now, instead of putting $50,000, now they only have to put down $40,000 or $45,000 because they put that much money in earnest money to start with. So earnest money, the only time you're going to lose it is you just throw your hands up a week before closing and go, I can't close. And then the seller gets your earnest money. Sure. So earnest money is, it comes back to you many times over, but we all did plan to go to closing, didn't we? Yes, we did. So that money's just kind of sitting there in a little holding pattern waiting for you to take it and add it to what you're going to owe. But the question gets to be, so Jason, we've got down payment, which could be 5, 10, 20%, whatever, it could be anything.
Right. Say 3 to 20%.
Right. Could be 50% if you have a whole lot of money laying around, but that's a stupid way to use your money these days because rates are too low, but that's a whole nother conversation for another day. Anyway, so we've got inspections. Let's just say inspections are $300 to $400. Mm-hmm. If you do any kind of hydrostatic or plumbing test, that's maybe another $200. And then your earnest money, your option money. So let's just arguably say it was $5,000 and another $200 for option. So that's just to get you started in a contract. I think that's probably pretty fair. And then Jason, there's closing costs.
Let's talk about closing costs real quick, because those vary depending on lender.
Right.
And so that there's so much to talk about there. Here's what I'll say is there are 3 categories to closing costs. At the end of the day, your lender fees and your title fees are probably going to run you if you're dealing with the right lender, around 3,600, not including title insurance. If you're having to pay title insurance, it depends on your price range, but that could add another 2,000 to 4,000 to those closing costs. And that doesn't include escrows and prepaid. So I don't want to confuse you on that, but those aren't part of closing costs. But at the end of the day, if you're a $300,000 to $400,000 buyer, you probably want to make sure that you have either in 401k or retirement funds, IRA, 401k, brokerage, or checking and savings, or family gift available to you of probably around $20,000. Typically, we can probably make that work.
Cost, that's everything. That's everything. Closing costs, down payment, inspections, everything.
Everything. And that doesn't mean that you're going to have to put that much down. It depends on the structure of the deal, because a lender can pay some of your closing costs through a higher interest rates. Realtors can sometimes get creative if there's some good reason, depending on what's going on, right? You don't ever want to assume your lender or your realtor are going to pay your closing costs, because that's a dangerous assumption, right? Because you get what you pay for, and we have to earn a living. And so it's a catchy thing, right, to talk about. But people ask me that all the time. And the answer is I'll always help where I can. And that's why it's important to make sure you're dealing with the realtor and lender that you're comfortable with, because we're going to talk about all this on the front end to where you're not caught off guard. You'll know in one conversation if you're ready for the next conversation to move forward, or if you know you need to stop and save a little bit more money, because it's just not realistic to expect that your offer is going to get one based on your current financial credentials, right? So 20 grand should do it, right? Family gift, you can get money from your family, you can get money from your 401k and brokerage account. It has to be family, so keep that in mind. So that gets tricky if you're engaged. That works too if you're really engaged. Well, what if I don't believe in marriage and we live together and we've been together for 10 years? We've got to talk about that and see what we can do to make it work that's compliant and legitimate, because all things should work. There should be no discrimination in that department at all. But we've got to figure out funds to close and make sure that you're okay. That's key. Credit, funds to close, employment. That's really everything. That's the skeleton of a file, right? Credit, employment, funds to close, credit. Yeah, I said credit twice. Credit's important.
Yeah. Your credit score is everything, because from there, the higher the credit score, the better the buyer you are, the more leeway you get down the road, whether it's interest rates, whether it's, all those things. You just become a really good, strong buyer, which is really important. I said it earlier and I'm going to repeat it. You don't want to hold back any information from your lender. Don't have to tell me. I can live with not knowing some of that, but your lender needs to know everything, because they can't help you if this surprise pops up, or, oh, I didn't quite mention this, right? That can't happen. It's the more they understand your life, the better they can help you down the road. Like, yes, I'm going to be changing jobs. I'm moving here for a job. I am. Any of those sentences are really, really important, guys. I really can't stress that enough, of how much information you need to be sharing with your lender so that they can help you make good, informed decisions. And one thing I love, Jason, I know many of my buyers have come to you going, we kind of want to keep our payments about $2,400 a month. What does that look like in a mortgage? And so you're able to work forwards or backwards is the way I look at it. But you can come in with an idea of what you're comfortable with in a payment that equals to this much in a mortgage. So let's use easy numbers. Let's just say that's $300,000 in a mortgage, and you've saved $20,000 to put down. Well, now we need to be looking to buy a house for $320,000, right? So you can back your way into this, or you can go forwards into it. But I quite frankly don't understand what $100,000 is or $300,000. That just doesn't mean anything to me. It's kind of like buying a car. Just tell me what the payment's going to be, because I don't really understand what that amount of money is in the grand scheme of things. It's just a number. It's like, what does that even mean? So a lot of people are comfortable knowing, we've been paying rent all these years of $2,500 a month. So we would be comfortable at $3,000 a month now, so yeah.
One of the things we could do too, that's why we wanted that full financial picture. So like, let's say you had, if I'm looking, I know you need a minimum of 17 to 20 grand on a file. I'm looking to see how much do you have in 401k? How much do you have in the bank? because I'm looking at your credit and I see that you have $1,000 in 2 car payments. And I can see that you only owe $10,000 on those cars. So without me saying it, I'm already thinking as I'm talking to you, I'm looking at you on computer screen as a number, realizing, okay, you've got 50,000. You're only going to need about 20 to get into it. You're uncomfortable with the payment I just told you, but that's the price point you're at, and you're not going to be happy and for settling. I know that if you just took another 10,000, we could lower your current monthly expenditure by $1,000. And so all of a sudden we're right where you want to be. But that's why it's important that you're working with a lender that's going to look at all those aspects.
Right. There's not, I think that's really the best point here is just, there's not just one way to look at something. And if you don't have a lender, I'm probably going to get struck by lightning, but guys, when you go to whatever.com to get your loan, I'm telling you, you're not going to get the kind of service that you're going to get when you go with Jason, or when you go with a lender that your realtor has worked with for forever. You know, it's just, there's a relationship there that I would never, ever let my buyers go to someone that I didn't know was going to take phenomenal care of them, just as I am. Right. So it's not a matter of going to ABC lender. You know, it's just, it doesn't work that way. It can, but it's not going to go well.
Well, then I'll say this. I don't know if you're allowed to say this, but I'll say this because I'm not a realtor, is that experienced realtors, if you submit an offer, I'm just going to say it as a lender because it's just true. And someone's got to just give you it straight. And that is, if you submit a pre-approval letter because you have done your due diligence on the front end, but it's a big bank, or it's an out of state or not local, maybe even out of city in Texas lender, you're already stacking the cards against yourself from your offer getting accepted. Those experienced agents want to see a local lender that they know the company, or they know the loan officer themselves, or that they know, if they know, most agents are going to know Mary Beth because she's been in the business for so long. So that's an advantage for you. But most experienced agents, if it comes to you or huge bank that we all see on every corner, if we got in our car right now and drove down the street to the intersection, it's not going to, you're not going to win. And by the way, you're also paying more, but that's another good reason to call me or others. Like
the frustrating thing too, Jason, is when you go to the bigger banks, you don't ever talk to the same person twice. So
and they're gone at 5 or 4 to 5 o'clock, and they're definitely not there on weekends and evenings when we're all doing the mortgage business or the real estate business. Yeah.
Right. And you think Jason wants a phone call from me going, I'm not happy with you? That's not going to happen. And so the other lenders, they don't care. They don't care that I'm mad. They don't care that I'm upset that they haven't done their job. So yeah, there's a lot to be said for relationship to make that whole transaction come together. And right now, as hard as it is, as I tell my sellers, selling your house is nothing. I mean, a monkey could sell your house. Keeping it together to closing, that's where we earn our money, because it takes total diligence to keep everything together and to keep everyone doing what they need to be doing. And conversation, when you have a lender that you can't talk to, or that doesn't give you weekly reports, or doesn't keep you informed that there's a problem, nothing good's happening there. I mean, it's just not. It's just not. And you've got a seller that needs to be where they need to be. You all are out of your apartment. You need to be where you need to be. It's a domino. It's a huge domino effect. And it's not for the faint of heart, and not just to throw it out there of just anyone can do your loan. I know it seems like it should be that way, but it's just not, guys. It's just not. So
what about, let me ask you a question, Mary Beth, because I'm experiencing this a lot too. And if I were watching this, I would want to know, what if I've got to sell my home? Can I win my offer if I'm a contingent offer?
Oh, no. No one's going to take a contingent offer right now. The market's too hot, meaning like I have to sell this house. I have to sell the house I'm living in order to buy this house that I want to go to. And there's not many people out there that can afford to own 2 houses. So I understand the gravity of that. I totally understand it, which is why I go back to, if you have a buyer that can give you 30 or 60 days of a lease back, that's golden, because now you've sold your house, you've got your money, and you can go buy the next house with no contingency. That's really important. I know our company, Dave Perry Miller, or the Ebby Halliday Companies, has come out with a buy program for our sellers to give them some insurance that their home is already sold. And so there's, several companies that do that as well. And that's really the only other thing, except that just know that you're not going to get that open bid on the open market, which is where your money is right now,
Right.
So yeah, no, it's very, very difficult for someone that needs to sell and buy. I understand. I get it. Yeah, no contingencies. That's an I want to be. Like, I hope that my house will sell so that we can do this. But if your house is already under contract and you've been through inspections and you're moving along, then maybe you're comfortable enough to drop that contingency and just put the offer in. Yeah. That's a tough one. That's a tough one. I hear you. Candace, did I see another question come through? Whoops, you're muted, I think.
I was just giving everybody Jason's information, so if they needed to contact him.
Oh, don't do that. No, that would be so overrated.
I know.
Yeah, if you want a lender that's going to get it done and talk to you, what's important to me when I send someone to a lender is I want to know that they're going to be given all the information to make an informed decision, just as I'm going to give my buyers all the information they need to make an informed decision on what to offer as a price, how to write a contract. I mean, it's the experience that we bring to the table, right? And so I'm not going to hand my buyer off to just anybody. I'm just not. I've worked too hard. I mean, we've been at it for weeks, months, whatever, to find the house that they want, that we finally won the bid. And then I'm going to hand it off to ABC lender. It's just not going to happen. It's just not. And so, yeah, knowing who you're working with it's everything. It's not just a little thing. It's everything. So that trust factor and that service factor it's vital. I mean, I need to know that they're going to be taken care of, and I do, which is why, that relationship has been there. All I care about is take care of my children that I send to you. They may be, 60-year-old children, but that's okay. They're my children. So I'm sending them to you.
And your clients become my clients, and the accountability is there because I'm representing Mary Beth. And that's the other reason for buyers to understand you ought to take that referral from your realtor very seriously. She works with me and a few other lenders. That's important for you to make sure that you're comfortable with who you're working with. But no, that accountability versus just any other big bank lender. And by the way, all the big banks buy our mortgage-backed securities. So we do business with these big banks that we're telling you not to do business with on the front end. So they make the world go round in our industry. But don't feel like just because you bank at XYZ Bank and that you're a great client, you've got a lot of money with them, that they're going to give you some special deal. They don't. They'll make you feel like that's the idea. They want to make you feel like you're getting a good deal, but you're going to pay retail for that feeling, and you can get you're going to get the same commodity that is a mortgage with a much lower rate and cost by dealing with me than someone else. But follow your realtor's referral because they have that relationship. And that is the most important thing. Just like if you're working with the wrong realtor, you're dead in the water. If you're working with the wrong lender, you're dead in the water. So that would be my 2 cents.
Something you just brought up is everyone's so rate conscious. It's like, guys, a minuscule amount of, a half a point here or a fourth of a point there, or whatever, whether it's 3 or whether it's 3.25. I mean, it's such minuscule amounts of money. But my point here is I get so many buyers that go, well, I'm going to go shop the rates. Rates are one portion of it. Closing costs are a whole other portion of it. So some of these lenders put the prices in their closing cost. I'm appalled at some of the closing statements I see and what the prices are that those lenders have charged to do their work and to get that loan. So, but rates change every day. And sometimes if it's a very volatile day or market, they'll change during the day, right, Jason?
That's right.
You'll start the morning off with a 2.5, and by 5 o'clock it's at 3.
It can be. Well, if the weather comes in poorly, like it would never happen and shut the state of Texas down, it's not like that's going to impact the market, but it did by half a percentage point, right? When we first came out of the freeze.
Right. Yeah, because it had been in the 2s and now it's in the 3s. But
Right.
guys, that's such a small, minuscule point. But my point here is that if you're going to call lenders to see what their interest rate is, which is a waste of your time and effort, but if you feel like you need to do that, at least call them within the same hours. Because if you call one on Monday and you call another one on Tuesday, the rates may not be the same. But if you'd have called the first guy back, his rate may not have been the same either. So shopping rates is the least of your problems. They all go to the same well for their water, pretty much. I mean, it's not like someone's going to offer you a 2% and someone else is going to offer you a 4%. It's just not going to, it's not going to happen. I guess it could.
And it's rate and closing costs. You never hear that on TV or radio, right? It's like, what's your lowest rate? It's like, okay, when people ask me, I'm like, listen, what you really need to ask me is what's your lowest rate and what are your lender fees? Those are the 2 things. It's rate and lender fees. And I go, and then once we get past that, I want to save you the most money I can. And I believe I will. You can test me in that and get to know me in this process. But what's more important are all the things we've just talked about here today about the working together strategically based on everybody's situation is unique and different. Every file is different. I've done this for over 20 years, 24 years. And the more I know, the less I know, because every single person's situation is totally different. So you have to work with a team that we're the expert, but we're the expert in that we have to start over every file and apply all the mistakes and the successes and failures that we've had through the decades together, which really makes us powerful in helping you, the buyer, based on that experience.
I say that all the time. I'm just like, don't memorize how you solve something because you'll never see it quite that way again, right? It's certainly built your experience, but it's never going to be the same thing exactly that it was before. Candace, do we have anyone else we need to address?
No, y'all answered all the questions and more. So you guys are good.
I think we've covered it. I think if you all have gotten nothing else out of this, guys, pick your lender. It's hugely important. Pick your realtor. It is hugely important. Ask them how many houses have they sold? I mean, it's like going to brain surgery. Do you want to go to the brain surgeon that's done 5 brain surgery or is it one that's done 500?
Right. Same
thing with the lender. Is this your first day on the job? I mean, I'd like to know that you've done a few of these, that I'm not your first client.
Right.
Now, it had to be new someday. So, those of you who are listening, don't get me wrong. All of us were new at some point. However, in this market, as crazy as things are, experience is going to be everything, not just something, it's everything right now. Because we're having to pull everything we've got out of our toolbox to help you win the contract and then to get the loan done in a timely fashion. So that's my last words. Jason, you have any last words?
Yeah, ask your lender, how many loans have you closed in the past 2 years? And then how long have you been in the industry? Just like if you meet a financial planner or Mary Beth, how many houses have you sold in your career? Or when you meet, and no one ever says this, no one ever does it. If you meet with a financial planner, you should be like, hey, nice to meet you. I'd love to let you manage my money. Can I see how much money you have first? Because when I first started in the business, I remember I had a financial planner with American Express. I don't know if they still exist as financial planners, but he called for a purchase. I was new to the business. I thought, wow, this is going to be a slam dunk. He's got great credit. He's a financial planner. I asked him about how much money he had for down payment, and he had $500. And I thought, is he new? And I was like, how long have you been a financial planner? 10 years. And then I got scared thinking, oh my gosh, what are the implications of that based on doctor, lawyer, financial planner? So ask, right? Ask, like, how many clients have you had? Look at reviews. Go online, creep on us. You should have all kinds of reviews, mostly raving reviews with a few mad people because there are crazy people in the world. But I don't even know that we have those. But I mean, do your due diligence. Don't go with just anybody because experience really does matter because we've learned a lot from our failures.
Isn't that the truth? Yeah, we have failed forward, I think is how we put that. We have failed forward. So thanks so much for listening. If you have any additional questions, please feel free to contact myself or Jason, and we'll have all the contact information there for you so you can see it and get a hold of us and ask us the questions that we didn't answer. We'll figure it out, right? We'll figure out what the answer is. So thanks so much for listening.